Hello, Arrive Nation, and thank you for joining us for September episode of Arrive Tenacity Talks. In this podcast series, I sit down with business leaders and industry legends and try to uncover their stories behind their success and understand their strategies of growth. Hopefully, these insights can help you grow and scale your business. Today, I'm very excited to have with me my good friend and a very valued ARIVE partner, Kevin Peranio, who is the Chief Lending Officer and partner at PRMG. He is affectionately called KP. If you have not met KP till now, today is the perfect day. We will fix that. The KP is an industry leader. What I like most about him is his attitude of giving value. He does this weekly video broadcast online on LinkedIn. He's probably one of the most followed industry icons in our industry, maybe around 16,000 plus followers, if I'm right. He has built his reach organically. And every week you will find him coming from his office with his trademark style, saying, "This is KP coming to you from Corona, California. Could be 8 p.m., 10 p.m., midnight. He may be traveling, but he always shows up and he gives value and educates the community." Thank you, KP, for joining our show. We will cover rates, markets, refis, AIs, a lot of things, but thank you so much.
Well, thanks for being here. I tried to break you out of your rhythm, but you are unshakable, just like you and your team's mission at Arrive. And it's good to see you. Last time I saw you, you were in town. We were singing karaoke together at a party that you hosted over there in Huntington Beach, and then we went out a little bit after. So it's always good to break bread with you and your team.
Yeah, thank you. And again, I want to thank PRMG for being such a valued partner. Our relationship has grown and deepened over the years. You have been a very early believer in Arrive since its inception. Thank you. You have been a mentor to me. So before we dive into rates, I have a question which I want to know. I know you went to UT Austin. You told me once you're a big Longhorns fan there. You go and watch all the games. How did you get into this mortgage industry? And tell us, how did you find PRMG? And you've been there, I believe, now 15 years. So what is your role there?
Yeah, I guess I've never really said it this way, but you made me think of it this way. But a friend of mine that I grew up with in high school, who I went to University of Texas together with, a really good friend of mine named Matt Fankhauser, who works at Cotality, formerly known as CoreLogic. He was a realtor in Austin. I was working at Dell Computers, and he just did not like showing kitchens and doing the things that realtors did back in the day. And so he found this job as a wholesale account executive at First Magnus, and he's like, "You'll love this." And so I was literally sitting on a beach in Venice Beach here in California, ironically enough, now that I live here in Orange County, south of LA. And he's like, "You got to get in this. It's going to be great." And so I remember, trying to figure out what I want to do with my life, and do I move to LA and try and figure out the whole entertainment business? Da, da, da. Anyway, I tripped into it because of a really good friend from University of Texas. We've had a great run. We're a privately owned company at PRMG, Paramount Residential Mortgage Group, and lots of stuff cooking. Obviously, we've been early partners with the Arrive team, even before your team took it over. And obviously, you've made great improvements. It's the best version it's ever been. We have a new portal that we're rolling out in our correspondent. We already rolled it out in wholesale. We've heard really, really good things about the use there. So, I think, if being, tech forward and trying to make sure that you offer originators however they want to be served, really good tech is an important part of the value proposition. It used to be people, product, and price, right? And so and you have to really sprinkle in technology. So I don't know what the P is for technology. So maybe that's part of your product, I guess. So but it's very important, and you guys have recognized it, and so did us at PRMG, and we're just rocking and rolling.
Thank you. It's so great to hear. And again, thanks again for the partnerships. So I'll jump into our topic, markets and rates. Fed just announced a 25 basis cut to the Fed's funds rate. That's what it is
Yep.
called.
Yep.
Typically when they cut rates, what we see is mortgage rates tick up a little bit. So help our audience understand this paradox. Fed is cutting the rate and rates are going up. More importantly, how should loan officers explain this to the borrowers? Because borrowers see these news everywhere. Rates have been cut, but mortgage rates go up. So what should our loan officers be telling borrowers, that why when Fed is announcing rates are being cut, but mortgage rates are going up?
Well, I think that if a consumer doesn't know, you know, why they're related to each other, they're probably not really going to know, you know, what the difference is between, yesterday and today in rates, right? So it's been just a couple days. What I would say is I would whatever the impetus was, what if the borrower is like, I saw the Fed cut the rates, does that mean the rates are low? You're like, let's get on the phone. I see the Fed's cutting the rates, does that mean they're going to go lower? Let's get on the phone. Hey, I'm your local expert. Let's talk about it. I'll tell you everything. Let's go. And just keep it simple. Like I see some videos, it's like, you know, you know, did you know that the Fed funds rate is not the reason that, it's like, don't try to outsmart your borrower. Like, don't be condescending. You can be an expert just by getting them on the phone and having a nice attitude. And what I would say, just simply, once I got them on the phone, is I would say, rates have been coming down for 4 months, especially the last 2 months, in anticipation of this rate cut. So rates are in a really good position. Let's see how they fit your scenario today. That's it.
Yeah,
Just
absolutely
move along.
right.
You don't have to get. I mean, and look, you and I, we're both. Look, I'm very wonky. I'm data driven. I'm nerdy. You and I could both get into it. This year and last year, the rate cut was highly anticipated. All the institutional traders that buy treasuries were getting geared up and positioned for a 25 or more basis point cut. And then it happened, and then they unwind the trade and they take some money off the table. And
Yep.
rates do get a little bit worse when that happens. Borrowers don't want to hear that. They don't care about bond traders. They don't care about federal debt. They don't care about the FOMC drama and who's on the board and who's getting fired and what the dot plot says. I like to talk about it. You and I like to talk about it. We all like to talk about it. Borrowers don't care. So keep it simple.
Yep. No, I think that's a good strategy. Keep it simple, keep it human. Just tell them rates have been coming down. The mortgage rates had already anticipated this cuts, and nothing much has changed. That's an awesome answer. Do you see more cuts coming this year? Two cuts are anticipated, and how about next year? Any guidance on that?
So this is where we go back to being kind of nerdy and charty and then trying to get predictive. So okay. So last year, just like this year, when the cut happened, there was the phrase I use, and I didn't make it up, it's been around forever. Buy on the rumor, sell on the news. So treasuries have been bought leading up to this year's cut and last year's cut. Then the news broke and it actually happened. And it's so counterintuitive. Like, if you're not a trader or you're not a stock trader, you're like, well, they said not only did they cut, they said they might cut 2 more times this year and one next year. Doesn't that mean that rates should go down? Or, you know, hey, the NVIDIA earnings report came out and they absolutely crushed it. Why is the stock going down? So again, a lot of times, really big, smart institutional money, they get in a position for the moment and then they sell on the news. Just when all of your normal people who think the way I just said, like, oh, well, things are good. Now I'll call and see if I can lock a loan. Now I'll buy NVIDIA. And then you're like, oh, wait a minute. It went the opposite direction than I thought. Big
Yep.
money always games the little guys, and that's just how it goes. So what happened last year after the sell on the news moment was then we got a very strong employment report. And so, inflation was coming down last year. Employment was kind of showing some weakness last year. And then both of them actually rebounded. But the first thing that really rebounded was a very strong October jobs report, which the first Friday is for September. So we have that coming up. I believe it's October 3rd is the Friday coming up. I think things will be choppy between then and now. We do get some inflation reports, which, unless it's, extremely high or low in one or the other. Labor is really the dominant factor right now. And so we're going to see on the first Friday of October, did labor rebound and get a little bit stronger than expected, or did it continue this trend of weakness? And so again, we're having fun here. It's all a parlor game. We're all professionals that watch this video. I think the 10-year treasury will stay in, they couldn't really break below 4. And 420, I like to call it the Elon line. 420 used to be the support, and now we've pierced down all the way to 4. So now that 420 line becomes the resistance. So I think we're going to trade between 420 and 4%. And the only way to knock the range up or down, I think the next big catalyst is going to be the labor report the first Friday of October. So we've got some time to finish up this month's pipeline, clear out our locks, name it. I mean, the locks have been insane. I mean, it's through yesterday. I mean, we locked $1 billion in loans
Wow.
through the 18th of the month, and we got just a little bit above that on the last day of last month. So, and again, we're medium. We're not like we're a community lender. I'm not trying to pound my chest. I know there's lenders that are smaller that'll feel some type of way, and bigger that'll feel. I'm just speaking facts here, right? To give you perspective, we locked just over $1 billion all of last month. We're already over $1 billion through yesterday. We're up about 50% or more month over month as a 3-channel lender. And so I think everyone's busy right now. And if we catch a little breather with rates kind of going up between now and the first Friday, let's work really hard to get our pipeline flushed out, closed, funded, and then get ready for the next wave, which, again, if there's a weak jobs report, we may see another little influx of refinance business.
All right, awesome. That is nerdy stuff, KP. That was awesome. Let's touch on the topic you hinted at. Like, let's say next, 3 months, 6 months, 9 months, whatever you can forecast or think of. Are we ever going to see a big boom in refis? Will it be a wave? Will it be a teaser? Will it be a mirage? What do you see happening? Let's say next 90 or 180 days.
Well, I think there's 2 factors at play here. So, who's in the money? Okay, so if there's a refinance, let's say we got about 2.5 years. Maybe you could stretch that and say 3 years, but pretty much since June of 22, any loan that's been done that's new as a purchase is probably in the money today, and could continue to be in the money. And I think I saw something like another 1.2 million borrowers are in the money if we get down to 6% on the average 30-year fixed. So that's a lot of refinances, okay? And then as rates come down, homes do become more affordable for purchases. So that the spring wave of purchase season that's coming up next year, you could have kind of a double tailwind. So that's one factor. The other factor, which is very important, is our industry's capacity. So let's just say, just for rough numbers, it's about right, but about 50% of all originators that were in here in the peak of 21, they're gone. And about 50% of the operational capacity at most of the lenders, that's also gone. So it does. So let's just say we, like I said, 50% up in locks month over month. If we're up 50% up in locks, but our capacity is not where it used to be, it's going to feel busy. It's going to feel busy because there's less people doing the work, both in operations and sales. And this is the perfect segue, and that's why we leverage tech.
Yeah, no, absolutely. We'll come to tech here in a second. So, what should loan officers or brokers who are listening to this do now so that they are ready to capitalize when these waves or booms come? What should be doing in their business today?
Well, if you haven't done anything to this point to capture it at scale, don't worry. There'll be other waves, to your point. And, equity lending is a really big deal. So I know a lot of companies are doing good work with second lien business. We have a product that we're rolling out in our TPO channels later this year. It's a fantastic product. We have a multiple equity, cascade of products already, but we've got some that we're going to roll out from a technology perspective. We just had to work on getting our new portal out. So Leo, Loan Express Originator, which we named over a year ago and is my deceased father's name. That is our portal. And we rolled that out, and we've been live, and it's been really good for our wholesale channel. And so to help people capture this business, we are finalizing our correspondent piece where you can draw your own loan estimates and closing disclosures on Leo on our portal in the correspondent channel. So that's going to be live here. We've already been beta testing it. So we think things like that can help you get in line to handle, this influx of business. And what I'd say is, you really have to have a good handle on your CRM at the origination level. Do you have a CRM that's easy to manage? Do you have clean data? Are your contacts clean? Have you already been having some regular cadence with your consumers? I love the guys at MBS Highway. They call it a strike rate, right? So even though like rates have been getting better all the way up until Wednesday morning or even the Tuesday of this week, you have to have been having conversations with your potential refinance borrowers ahead of time and going, hey, borrower, when you get to this rate, this is what the value proposition is for me. Are you ready? Can I pull the trigger when I see that rate? That's going to be my strike rate. And I like that concept of having the conversations ahead of time. So then you're just putting automatic triggers on your locks. When Smith gets to 6.375, pull the trigger, lock, boom, done. Then you just send over the loan estimate to your borrower, go, hey, remember that thing we talked about? I did it for you. We caught a great time in the market. Here it is. Disclose, let's go. And so, you can set up your stuff like that. And look, if you guys want to get really advanced, we've got some AI voice product that we're working on. It can help you. It can help set appointments, help set leads. Those are things that we're working on as well. I know that there's a lot of that stuff out there. It can help you make phone calls at scale. You don't have to use that. Depends. I mean, if you have 100,000 names, maybe you want to use that. If you got, 100 names, maybe you can just make the calls yourself. But there's a lot of stuff that technology can really help you with and help you scale in the moments when it can feel really busy because there's an overwhelming amount of activity.
Yeah, no, absolutely. And you kind of rightly touched on technology as you said, like, AI has advanced to such great extents. Just in the last couple of years, the changes have been instrumental or dramatic, not like incremental, right? You mentioned this voice assistant. There are so many stats out there that say all this mundane talk of talking to a borrower or connecting the call. Even we use this in our business. Like, you want to outreach to a lot of brokers at scale. How do you get them on the phone? So it helps you save time. And the concept of strike rate, even Arrive provides a tool where brokers can set all these checkpoints, and because we get rates from lenders like PRMG, so when the rates are approaching that level, we alert them saying, hey, this borrower might be eligible, go and talk to him, send a loan estimate. So all these great tools are available by different companies. It specifically in AI, there is a lot of, I would say, misconception or fear factor as well in loan officers. They think, oh my God, is AI going to replace me? Is it a job creator or a job eliminator? Will underwriting go away? Will loan officers go away? What is your take? Where the tech is now and where AI is headed. Will it be a game changer for our industry, or it'll maybe lead to reduction in jobs?
Well, I think okay. Let me just get the doomsday scenario out of the way first. I mean, this is a lot like the NAR settlement, right? Everyone was worried about how many realtors were going to be out of jobs because their commissions were all going to come down, and it's kind of a big nothing burger. Commissions aren't even really changed. But I think there's a different kind of wave that's attacking the real estate community, just like it's, I would say, attacking the originator community. Um, you know, if you don't have a way to grow your portfolio of borrowers to talk to grow your database of names or contacts or however you want to talk about it, if you don't have a way to do that, um, obviously that will put your job at risk. So, but that's just basics. And then once you have those, if you're not making the phone calls because you're tired or you got to, drop one of our four kids off somewhere or whatever, then of course, you're putting yourself at risk because, these AI virtual assistants They're making phone calls at scale. And I think people get caught up in like today, like what it is today, right? You know, so so what is it today? What I've seen is it basically calls leads at scale and does a good job of having full blown conversation based on triggers. I saw them look at this website, look at this home listing. They have an equity alert. There's a rate alert, and so it made the call in the timely fashion immediately, which
Yep.
humans don't always do. And then it just simply set an appointment and then passed the lead, either a warm transfer or set an appointment to an originator. So I think as it stands today, it's so funny. I see some people go online. They love to be like the fake champion of originators, and they're like, it'll never replace them, well, there are some people that need to be replaced, and it will replace them. If you're, let's just say you're a broker owner, right, or a producing branch manager, however you want to think about it, and you've always wanted to scale yourself and you keep hiring these kind of younger LOs, and maybe 1 out of 5 works, 2 out of 5, and you're just tired of that hamster wheel of like hiring some people and training them up, and they're just never as good as you, of course. And so you're like, gosh, I can't scale me. And so, here's a virtual assistant that can help scale you in a certain way. So then you add on the agentic AI that is texting and having conversations at scale in real time, accurately collecting documents from borrowers, pulling them into your system, making sure that they're checking off against underwriting conditions. I mean, you start to look at some of the people throughout the origination channel. And yeah, I think some LOAs and some junior processors and weak processors and junior LOs and weaker originators, I think they are at risk. And but they have to do is just step up and do what everyone else before them has done, and then just work your ass off and be effective. And so, um, I'm not saying it's an extinction event, because just so much business out there. Um, and if I could add one more thing, our priority is to do voice first, because we want to help originators um, get more loans come through the door,
Yep.
which then creates more business for the existing processors and loan officer assistants, and then so stretch them to their bandwidth. Then we want to add the agentic AI layer second after voice, because then it can give the lift for the extra business that's there. Like, some people want to do the texting bots and the email bots first because you want to save what, 3,000, 5,000 bucks, on your processing and LOA team. I would rather save their jobs, go get $50,000 more in revenue with the AI voice bot setting appointments, then come back and work on training and enhancing the operations team. So we're doing voice first, then agentic AI texting and emailing later.
Yeah, and that's such an awesome strategy. Building your pipeline, getting more business in the door is such a good use case. It will help, brokers grow their business, protect their business and the jobs of their processors and assistants. And like you rightly said, AI is all about scale. That's how we see this. It will help you get the same things done faster, quicker, cheaper, more efficiently. And people who do not adopt this are at risk, to your point, or people who are still very junior, they're not stepping up because the technology is here, it is real, it is coming. So I think it is in everybody's best interest to see how we can align our workflows and processes to make best use of that. So that's so helpful, KP. Thank you. Thank you for that. I think we are on the top of our time. I'll ask you maybe one last question on culture and leadership. PRNG is an awesome company. You're also very humble with a giving mindset. My question is, as a leader, why do you think culture is so important for the growth of an organization, and what values do you look forward to if you're hiring someone, or you're building your team, or you're growing your team? Give us some insights on that.
Sure. Well, I think, for us, we're privately owned. So there's Paul Rozo and Robert Holliday that founded our company 24 years ago. I've been with the company 15 years, as a partner, and owner with them, together with them, about 10 years. And Gary Malice is also a partner. He runs cap markets and strategy. So I think like being part of a team, and having that, realizing you can't go it alone, as ownership, And then being privately owned, of course, has a ton of advantages. It's all of our own money. We owe nobody anything. There's no debt. We've, to quote Eminem, settle all my lawsuits. So we're good. We feel really clean, and so what I think was pretty interesting is we have this thing that we put out that says that people are rooted at PRMG for X amount of years. I don't know if you knew this, but more like over 25% of our employees, let's call it about 1,400, have been with this company for 10 years or more,
Wow, that's
which
awesome.
which is pretty cool,
Yeah,
and
awesome.
and I know this is really a TPO audience, but I think it'll kind of resonate. We just had our retail leadership conference in Huntington Beach, and then we have our sales rally for all three channels coming up in February. And in this conference we just had, people are like, we love it here. It's amazing. I mean, I love this place. And so, we just kind of got off of a week of kind of feeling that vibe. And so, when you say the word culture, it's hard because it's kind of overdone. It's hard to kind of put your finger on it. It's something you like our CMO, Paul Lucido says it's an earned culture. But I hate using the word and talking about it because it kind of feels icky a little bit. You
Yep.
just have to feel it. You just have to feel it. And um, I'll just throw out one more thing. I mean, you know, you guys you see my LinkedIn videos. You see how we operate. We're not always like, we're the best, we're the best, we're the best. Come use us, we're the best. And then, it's like I mean, I could be way more forceful and cut more deals and try out there and try and earn more business. And maybe I'm stupid for not doing as such as a leader of our origination channels. But the reality is, we're a community lender, we're privately owned, and we're just grinding alongside with you, and we're going to get in where we fit in. And we're not pushy salespeople, but we've got a pretty damn good company and a good offering, and we're really proud to serve originators how they want to be served.
That's so awesome. I'm so proud of what you guys have built, your company. It is awesome to see you are thriving in these markets and are ready for the future. So thank you again, KP, for those insights. As I told you before we started, I do some rapid fire questions with everyone who comes on my show. They may be out of blue questions. What I would like you to do is you have to answer them in maybe one phrase or one word, no long sentences. Is that okay? Like that's kind of all I expect. So you're ready? We start.
Ready.
Oh, where do you think will the rate handle be by Q1 of next year? 30-year
Uh,
conventional.
30-year conventional, I'd say 5.875.
Awesome. That's cool. If KP was not doing mortgages, what will he be doing?
uh, I don't know. I would have liked to have been a drummer in a rock band. That would have
All
been
right.
fun.
That's so awesome. I had a picture of you in the intro. I forgot to show that. Let me show this to the stage. You're an awesome rapper. We had and and you know what? You kind of nailed that. You'd be a great drummer in a band. So thank you, KP, for that.
Well, okay, that was Kendrick Lamar. So yeah, little different entertainment vibe there. But I but
It is the
but
same.
you did good. You knocked out the park too. You did fantastic.
All right. Let's think. What else can I ask you? What is one mortgage myth that you think you want to retire?
A mortgage myth.
There's so
Um,
many myths in our industry. Anything that comes to your mind?
God, the 20% down one. It 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 it's such a myth. 20% down. I mean, the, already the biggest hurdle to homeownership is the down payment, and that's only going to get worse as prices go up and insurance goes up and taxes go up. But God, it's just like I wish the myth was you can buy a house with no money down. Like, let's just start spreading that lie, right? Which, by the way, isn't exactly a lie if you're going USDA or you're a veteran. But let's make the myth. You can buy a house with no money down, and then if we have to like correct it, I'd rather correct it the other way.
Yeah. I think you were supposed to do one word or phrase, but that was an awesome response. So everything is good. If there is one thing our loan officers should do now to build their business? One thing, what would that be?
Make more phone calls. I mean, it's a contact sport. You know,
Yep,
more
business.
effective phone calls. Let's just say that.
All right. Outside music, drumming, singing, rap, any other fun hobby or passion that might surprise our audience that you have?
We just have 4 kids here, so soccer, kids soccer every
Kids soccer
weekend,
every weekend.
year
That's
round.
awesome. Yeah. All right, KP, I want to again thank you for your time here. You're awesome. You're an amazing human being. Keep educating the industry. Keep pushing us forward. Thank you. Thank you so much for your time.
Thank you, Harish. I appreciate it, my friend.